I've got some tips for you when it comes to buying a home, getting a pre-approval, and protecting that pre-approval. I've broken them down into 10 don'ts and 5 do's. So let's get to it. My name is Scott Wynn. I'm a licensed mortgage advisor in Colorado with the Wynn and Egan team at Citywide Home Loans. I want to help you buy a home. I believe that if you want it, I can help you make it happen. I realize not everyone has 20% to put down or perfect credit and is ready to buy a home right now. And that's exactly why I create these videos and post them each and every week. So if that's you, hit the subscribe button so you don't miss out on a future video that's posted here. All right, our first don't. Don't change your job and don't quit your job. This may seem pretty self-explanatory and pretty obvious to many people. However, we see it all the time. A lot of times what we see is that people are getting a promotion or what they think to be a promotion that will help them in qualifying for a mortgage. But there's a lot that goes into qualifying from a mortgage perspective related to income and employment. And sometimes those changes in a job can change the way in which you're paid, which can impact your ability to use that income for qualifying. I'll give you an example. Let's say that you are an hourly employee working full-time, and a promotion might be to go into a base plus commission type employment situation. The opportunity for income is much, much higher. However, the base pay may be lower than what you're currently being paid now. And so by taking that new job where the base pay is lower, but there's an opportunity for income through commission, will actually have a negative impact on mortgage qualifying because your qualifying income is going to be based off of the base pay, the lower pay, not necessarily the commission income because we don't have a history of receiving it. Don't buy a car, furniture, or appliances in anticipation of closing on a home purchase. Now, this is because you are either going to be depleting your assets or incurring debt, neither of which is good from a mortgage qualifying perspective. Obviously, the lower amount of debt you have and the more assets you have saved up, the better it's going to look. So you're going to want to make sure that you don't go out and buy anything until after closing. Don't use credit cards excessively. What I typically suggest to my clients is that you use your credit cards the same way you always have. So if you bill on them each month and pay them off at the end of each month, great, keep doing that. If you make minimum monthly payments and are qualified with a pre-approval based on that, keep doing that. What you don't want to do is change the spending habits or your credit card habits during the time of pre-approval. What your mortgage advisor or loan officer wants is predictability. By having a predictable spending pattern that we can see and pre-approve you on, we know that we can get you pre-approved and ultimately to closing so that you don't have a situation pop up that was unpredictable based on a change that you've made to your spending habits. Don't let current accounts fall behind. Having a 30-day late payment on your credit report can have a drastic impact on your score. That's the last thing you want to have happen in the midst of looking to buy a home or after you have a pre-approval in place. Just because you have a pre-approval in place does not necessarily mean that we're not going to see any changes to credit. In fact, most lenders these days have to pull a credit report just a few days prior to closing to ensure no negative items have hit your credit or no new debt has hit your credit. So having an account fall behind and incurring a 30-day late payment may have a huge impact on your ability to close on your next home purchase. Don't co-sign for anyone else. Again, this might seem like a pretty obvious point that you don't want to go out and co-sign. However, a lot of people see that co-signing isn't necessarily related to them incurring debt, but really just helping somebody else incur debt. However, when you co-sign, you are just as obligated on that debt as the person you're co-signing for. So you really do not want to co-sign on that because then that debt must be used and considered when qualifying you for the mortgage. Don't give permission for anyone to run your credit. Now, there are going to be a few exceptions throughout the home buying process where you can't avoid this, such as possibly getting homeowners insurance or something along those lines. However, once a pre-approval is in place, you don't want to be going out and getting pre-approved for a credit card at a furniture store or shopping for an auto loan potentially or having lots of different people pull your credit because, again, that can have an impact on your credit score and may impact your ability for closing to occur related to your mortgage. Don't spend money you have set aside for closing. You've saved that money up, you've got it available for down payment and closing costs, and you may have an estimate from your loan officer or your real estate professional telling you how much to expect at closing, and any excess may seem like you can start using for potentially purchasing those furniture items or those things for the new home. However, there are possibilities where those numbers can change, and the last thing you want to do is use up that money that you have set aside and then not have it available in the case that there is a need. The other piece of this is that many loans these days have reserve requirements or can help you in qualifying if you have sufficient reserves. Reserves are the number of months of payments you have set aside in an account after all down payment and closing costs are paid for. The higher number of months of reserves you have, the better qualified you are in the eyes of the mortgage lender. So having more money is going to help you in qualifying, and having less may hurt you or possibly stop you from being able to get qualified. Don't make strange large deposits into your checking or savings account. This is something that must be documented as we go through the mortgage process, not only after the pre-approval, but as you're working towards closing. So any large deposits or abnormal deposits must be documented. So the last thing you want to do is deposit a large amount of, let's say, cash that can't be documented, and then have that jeopardize your mortgage pre-approval and ultimately closing. Don't change bank accounts. Transferring an entire bank account from one bank to another can have a big impact on the documentation that's required through the mortgage process and could potentially delay closing. So you want to make sure that you maintain your checking and savings accounts, or all bank accounts for that matter, with the same bank you had at the beginning of the process through closing. Now after closing, you can do what you want. However, you want to make sure that you don't change it during the process. Don't move money around between bank accounts. It may seem that you have a checking account with one bank and a savings account with that same bank, and transferring money between those two accounts is no big deal. However, all of those transfers must be documented by the mortgage lender. It just increases the amount of work on your side that then could potentially delay closing because of the underwriting process on the mortgage side. So leave money where it is unless you've talked with your loan officer first to ensure that it's not going to jeopardize closing time frame or underwriting approval process. Now here are the 5 do's related to protecting your pre-approval, getting pre-approved, and buying a home. The first do is to make all your payments on time. Having just a single 30-day late can have a drastic impact on your credit score and may impact your ability to get qualified for the mortgage and get to closing. So make sure that all payments are made on time. Do continue to save money. Again, we want you to spend like you've normally spent in the past. We want you to be predictable, as we talked about before. However, if there's any excess money that you can set aside, it's just going to help your qualifying process by showing more reserves in your accounts that will increase your qualifying position from a mortgage underwriting perspective. Do save all of your financial documents and set them aside. As you're going through a home buying process, many people are packing up, putting things in boxes, and preparing for that move to the new home. Well, in the midst of that, you're going to want to make sure that you have a safe and reliable place where you can put all of your financial documents that you may be receiving, such as new paycheck stubs, new bank statements, and if it's tax season, your tax forms and things like that, so that if the lender requires them, you have them easily set aside and accessible so you can provide them quickly and easily. Do make sure to let your loan officer know about any big financial changes that occur. So if there is a situation where your income is changing or your job position is changing, or something comes up related to a late payment or something like that, it's better not to try to hide that situation from the lender, because ultimately, I'll tell you, the lender will find out. And that's the last thing you want to have happen, is have a situation where the lender's trying to scramble at the last minute to help solve a problem rather than knowing about it up front to avoid any potential delays in closing. And do ask questions about your loan. That's exactly why your mortgage advisor is there, is to answer those questions that you may have. So if you have a question about how your payment works, or why something is the way it is, or why a piece of documentation is required, certainly make sure that you ask those questions. There is a lot of complex information that will be sent to you in the form of disclosures, and it is perfectly acceptable. In fact, I would say encouraged to ask any questions you have about what you see on those documents, or anything that maybe you don't quite understand or is a little confusing. So be sure to ask as many questions as you feel you need to ask in order to feel comfortable with the whole transaction related to both the home purchase and the mortgage transaction as a whole. So there you have it. 10 don'ts, 5 do's when it comes to buying a home, getting pre-approved and maintaining your pre-approval. If you have a question related to these do's and don'ts, certainly let me know in the questions below. And if you have a question related to home buying that wasn't covered in the video, let me know that as well, because I may record a video just like this. Thanks for watching.